Hey, what's up with you guys? This is Irfan here from smartincubator.com and welcome to another video. In today's video, I'm going to break down two trades that I took this morning. One of them was loss and the other one was a winner, and I want to show you exactly why it happened, guys. Even the last trade that I had on EURUSD had a really good setup and I could re-enter my trade, and unfortunately I didn't because I had a trade on GBPUSD, so I didn't want to enter two trades in two different, pairs, especially when you're trading EURUSD and GBPUSD. You don't want to trade them like exactly the opposite. One of them sell, one of them buy. It doesn't make sense. So I just wanted to wait, and I want to show you exactly how I took that trade. So EURUSD was a really good one, guys, and if I want to do a little bit of replay for you to get you back to the beginning of New York session, you'll see that, let me start from here. Okay, so this is exactly when New York session has started. 8 in the morning Eastern Standard Time. You know what time I start? Always, New York Standard, which is New York session opening, 8 a.m. Eastern Standard Time. So when I woke up in the morning, I noticed that it already had this high probability supply zone right here. So it means that there was a gap, but it filled in really quickly. And there was a high chance that the price just wanted to keep coming down, and the reason was that we had a huge rejection on this candle here. See this doji candle here, and the gap is already filled in, and we have lower lows and lower highs. So there's also this support level here with a bunch of liquidity underneath. So let's say that I wanted to take my sell position here, put my stop loss here. I didn't do that, and I shouldn't do that. Why? Because there's no obvious gap between this candle and this zone here. It's filled in, it's already tapped, so it doesn't make sense that I put my seller stop here, put my stop loss here, and my TP here, because if I do that, you'll see that I get a stopped out easily, because this is a low probability order block and not high probability anymore, just because there's no gap. So, but at the same time, it created this high probability order block right here, this one right here. This is the first high probability order block that really, just got filled in really quickly. Look at this. See, we had a huge spike towards upside. The next candle actually tapped into this level, tapped into this zone super quickly. So it means that there's no gap left. However, there's another one right after that there is a gap. See, we have this huge move towards upside. The next candle never tapped into this zone, so there's an obvious gap between this candle and this zone right here. So now we know we have a high probability order block, and which is a high probability demand zone. And by the way, the price is also consolidating here, so we can say that the trend of the market is going to change just because it formed this kind of consolidation, plus we have this high probability demand zone right here. So we can just wait for the price to tap into this level, and it actually did. And what I actually did was putting my buy stop right here and my stop loss here, and my TP was here. Why? Because we have this gap from here to here, because we have multiple red candles back to back that created this gap. Or right here, see, from this candle all the way to this zone here, because this is the last bullish candle. The next candle after that is the first one that actually dropped out of this box, and the next candle after this drop never tapped into this zone. We know there's a high probability order block here. So what I could have done was to take my TP right here. So it's a beautiful 1-to-2 risk reward ratio trade. And guys, that whenever the price tap into your zone, put your buy stop or sell stop underneath or above the previous candle, because there's a high chance like this that it just literally goes up, trigger your buy stop, your stop loss is here, and then now you're in the position. And if I move forward, you'll see that this is exactly what could have happened. Easy 1-to-2 risk reward ratio, easy, no indicator, pure price action, only based on high probability supply and demand zones. And you should easily see that okay, we have a bearish trend, we have multiple breakout structures towards downside that makes the trend bearish, such as this one, and it kept creating lower lows and lower highs. But after this level, guys, see that it started creating consolidation. So this consolidation means a change. It means that the trend of the market is trying to change and go towards the opposite direction, which in this case is going to be uptrend, and it actually happened. So how to enter? Use high probability supply and demand zone, and that's how we can take a 1 to 2 trade. And the next trade that I took on this one was exactly this one. Yeah, from here, I think it was this one if I'm not wrong. No, it didn't get respected. So as you know, this high probability supply zone didn't get respected. So I'm just wondering where the next one was that I took, and it was a beautiful 1-to-1 as well. Oh yeah, this one right here. So it formed another high probability supply zone from here to here, and you know, as usual, waiting for the price to tap into this level, and it did. So when I put my sell stop, instead of putting it here, I put it here, and my stop loss was here, and my TP was right here. And this is exactly what happened. It triggered my entry, hit my TP. Look at this. Look how a sniper this TP was, because literally right after that, the price went up quickly. And if I wanted to put my stop loss here or here, I would have stopped out. So a lot of people got stopped out here because we had this high probability supply zone. But there's a problem. The problem is that this candle, actually there was no problem. I mean, if you took this trade, this sell trade here, you would have still, you know, done something right. But sometimes it happens. It's not 100% accurate that for each and every high probability supply and demand zone that you trade, it's gonna be like go towards your direction. It doesn't happen all the time. But you gotta be super accurate and trade according to the trend. So in this case, when you know that you had this consolidation happen here and the break of a structure towards upside, then this zone right here is going to be exactly the opposite of the direction, because you know that the trend of the market is bullish, but here you're trying to sell, which is, you know, bearish. But in this case, you have an uptrend market. But a lot of people say, okay, if it's the case, then why are you taking a sell trade here? In this case, I try to get out of the market as soon as possible. Even here, you see that if my TP was right here or here or here, then I would have been lost, because it would have hit my stop loss and I traded opposite the trend, which I didn't want to. So if you want to do it, guys, if you know that this is a high probability supply zone or demand zone and you want to get out of the market as soon as possible, then do it. Take your 1-to-1, get out of the market, or just wait for a better confirmation to trade according to the trend. So I don't recommend trading opposite the trend, but if you do it like this, 1-to-1, get out of the market. So this is the first one, guys. Even for EURUSD, something interesting happened. I got stopped out here, and the reason was that I noticed this high probability demand zone here, from here to here. See, it's a beautiful one, and it was valid. But the problem was that when I saw this candle tap into my zone, I had my buy stop here, and then it triggered my buy stop, and it stopped me out right here. So, you know, it stopped me out right here, but literally right after that, you see that it was still inside the zone. It wasn't invalid. It created some sort of consolidation, and then here I could have easily entered my buy, my stop loss here, and my TP right here. So this is what I could have easily done if I wanted to enter my buy position, because this zone is still valid, and you can actually identify the formation of these candles that the trend is trying to change. If it didn't want to change, then it would have just broken this box. But there was also another thing. We have this high probability supply zone here. So if you want to enter your trade here, then you could put your stop loss here and your TP here, but it's less than 1-to-1. So this is another risk that you might consider. If you want to take a 1-to-1 trade, it would be exactly in the middle of the box. I personally wouldn't do that. Some people do, but I try to, because when I see a high probability supply and demand zone, I try to take my TP before that, because in most cases the candle literally tap into the zone and then reverse. But in this case, it didn't even respect the zone, and it just broke above it. But if you want to take a one-to-one trade, this is how it works, and you can, you know, pay attention to the price, because sometimes it acts exactly inside the zone and it's still valid. So you need to take that into consideration. So that's it for this breakdown, guys. Before you go, let me show you the results of Gold EA Incubator on 3 different accounts. On this account, I don't know if there's a problem with the connection to my FX book that doesn't get updated, but we'll fix it as soon as possible. Right now it's almost 47% in profit. This one is recently updated, 135% in profit on a $4,000 account, and the profit is $1,387. And this one, as you can see, guys, this is an account that we manipulated ourselves. We shouldn't have done that, but we wanted to test some stuff to see how the parameters work inside the settings tab, and we put the equity stop at 50%. We decreased the maximum number of trades that are open, and it hurts our account. That's why from 130% it dropped to 40.74%. We are still up in profit, but the profit got decreased dramatically just because we touched some stuff. Otherwise, we would have been up over 140% in profit. This is kind of an older account, but we are still in profit, doesn't matter. But this is exactly what happened. I explained it on our Telegram channel as well. So guys, if you want to trade completely hands-free and get results like this, and if you want to open multiple accounts, you can do that. You don't have to do anything manually on Gold EA Incubator, because it literally does everything for you, and you just need to sit back, relax, and see how much profit you're making on a daily basis. That's all you need to do. And if you want to get more information, you can contact us via the WhatsApp widget on our website, or there is also a widget for live chat. You can use both of them, or check out smartincubator.com. Gold EA Incubator in Expert Advisors tab, and that's it. If you have any question, we are always here for you, and I hope that you got value from this video. If you did, give me a thumbs up, subscribe to my channel, turn on the notification bell, and see you next time.